Grade 12 learners, welcome to today's exciting mathematical literacy lesson. My name is Nikiwe Zulu and I am going to be your teacher for today. This lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center. Last week, you started with the section of finance with my colleague with a specific focus on your financial documents and your value-added tax. Now, today's lesson is a continuation from last week, but today our focus is going to be on the section of UIF and your income tax. By the end of this lesson, you should be able to work with the pay slips in order to understand the net pay, the gross pay, and the UIF deductions. We should be able to calculate UIF, calculate the taxable income, use the tax tables to calculate income tax for individuals, calculate the medical aid credits, and lastly, determine the relevant tax rebates. Now, as we know, with every section in mathematical literacy, we must be familiar with the terminology. By familiar, I mean that you should be able to explain the concepts in mathematical literacy. And these days, examiners want you to explain the concepts according to the given context. So make sure that with every section that you start with your teachers, you revise the terminologies that are there because it can be asked in the exam. Now, with the section of income tax, the highlighted words are the ones that you are going to come across in this section. So you should know what is a gross income. That by gross income, we are referring to the money that one receives before any deductions. So your salary that you get before any deductions, we call that your gross salary, or rather your gross income. You must know when we talk about net pay, what are we talking about? We are talking about your income, or rather your salary, after all the deductions have taken out, your take-home money. That is your net pay. And then you must know what do we mean by the word salary. You must also be able to differentiate between a salary and a wage. You must know how to explain tax, how to explain taxable income. The examiner can also ask you to give to tell them what does the acronym UIF stand for. Now, you mustn't go in the exam and embarrass us. UIF stands for Unemployment Insurance Fund. They can also ask you what does the acronym VAT stand for. You must know it stands for your value added tax, and it is calculated at the rate of 15%. Your UIF, it is calculated at the rate of 1%. What is UIF? When you talk about UIF, the abbreviation, it is an unemployment insurance fund. Note that this unemployment insurance fund, it is not an explanation of UIF. It is actually UIF when it is written in full. So this is calculated at 1% of the basic salary. So you must always be careful, because sometimes you'll find a scenario whereby a person has a gross and they also have a basic salary, and a gross and a basic are not the same. Remember, with the basic salary, it is the salary that you agreed upon between you and your employer, that this is the standard amount that we are going to pay you. Whereas your gross might include additional allowances. If you've got traveling allowance at your workplace, your basic plus your traveling allowance will give you your gross income. Or if maybe at your workplace, they allow you to work overtime, so that extra money that you earn for overtime plus your basic salary will give you your gross income. So that is why we are saying that with UIF, it will only be calculated on the basic salary. We will not calculate it on the gross, because now your gross, if it has allowances, it means it will be inconsistent. This month, your gross would be this amount. Next month, the gross would be that other amount, meaning that whatever amount that must be deducted for UIF, it will not be constant. So what is the purpose of UIF? It exists to provide short-term relief to workers when they become unemployed, or when they are unable to work because of maternity leave, adoption leave, or illness. The one example that I think all of us can relate to, remember in 2020, the whole country went to lockdown due to the COVID-19 pandemic. So most of the people that were working for private companies like your KFC, your Jet Clothing, all those stores, they had to be closed because the country was on lockdown. Meaning that if the shop is closed, if KFC, for example, is not operating, then it means there is no money that is coming in. So it means the owner of the shop is not able to pay his or her employees. Then what happened? That is when now people had to claim money from their UIF because they couldn't work, but at the end of the day, people still needed to live. They still needed to survive. They had families to take care of. So that is where we saw the importance or the usage of UIF. With UIF, it is calculated at 1% of the employee's basic salary. Let's say I work at a petrol station. It means I'm the employee. So from my salary, they will deduct the 1%. And then the petrol garage owner, that would be my employer. My employer must also contribute 1% towards the fund. Now, the total that goes into the fund will be how much? It will be 2%. Remember, this 2% is from my 1% as an employee, the 1% of my employer. And then the total now that goes into the fund, it is 2%. Now, there is a limit to the basic salary amount on which the 1% will be calculated. And this limit is called the maximum ceiling. What does that mean? It means as much as we are going to deduct 1% from my basic salary, my employer is also going to contribute 1%, and then the total that goes in the fund is 2%. There is a limit that they can only deduct up to a certain amount, because there are people that are earning a lot of money. You find that someone is earning a lot. Some people are earning a lot of money. So for that person to contribute their UIF and for the employer to be able to match that standard, it becomes almost impossible. So to avoid such instances, that is why now there was a policy to say that there should be a maximum ceiling whereby a person can contribute for UIF up to a certain amount. Now, as from 1st of June 2021, the maximum earnings ceiling was 17,712 per month, or 212,544 annually. What does this mean? It means if you are earning more than 17,000 per month, let's say maybe you are earning 18,000, it is more than the 17,712, and someone had to calculate your UIF. They will not calculate your UIF using the 18% because you've already exceeded the maximum ceiling. So what will happen? They will calculate your UIF based on this amount, the ceiling, the 17,712. So they will just say to calculate your ceiling, 17,712 multiplied by 1%. Let's take out our calculators to press 17,712 multiplied by 1%. I am getting 177 and 12 cents. So that is the amount that you will contribute per month. Instead, if you had calculated 1% here, if you had calculated 1%, the UIF was going to be 180. But now this 180, it is above the maximum ceiling. That is why now it will be calculated on the amount that is exactly at the level. For employees who earn more than this amount, the contribution is calculated using the maximum earnings amount. That is exactly what I did, because this employee was earning more than the allocated amount. So we use the maximum ceiling amount, this one, to calculate the UIF, and this is the one that will be deducted. And even for the employer's contribution, the employer will also contribute the same amount of 177 rand and 12 cents. Here is a practical example of where we can apply the UIF, or rather the type of questions we can expect in the exam with regards to UIF. Study Solly's payslip provided alongside and use it to find the missing values of A, B, and C. So what we see here, it is a payslip or rather a salary advice dated 25th of March 2020. The name of the employee is Solly van Eerden. And then what is his occupation? What does he do? He's a specialist baker. And there is Solly's ID number, his tax number, his bank account number, his address. And then, very important, the section of money. Income. Remember the income? It is the money that comes to Solly, the money that he earns. He's earning how much? 18,019. And are there other additional incomes there? No, there's nothing. There's only one part of the income, which is the basic salary. And since there's nothing else, we can write the total here, and the total is indicated as what? As the gross income. So in this context, in this scenario, the basic and the gross income are the same. They are the same. So if you are going to calculate your UIF, whether you use your basic or you are going to use your gross, it won't matter because the gross and the basic are the same. But for the sake of uniformity, for the sake of consistency, when we calculate our UIF, we are always going to use the basic salary. And then the deductions. What are the deductions again? It is all the monies that are taken out from your salary or from your income. So the deductions, the following deductions are taking place in Solly's payslip. There is income tax. He is a member of medical aid. He contributes towards his pension. He contributes towards UIF. And then there is a total deductions. After total deductions, there is the net pay. What is net pay again? I explained this when I was explaining the terminologies. Net, it is the income after the deductions have been taken out, meaning it is your take home income, the one that reflects in your bank account to say ding ding, you've been paid. This is the money that you've been paid. So that one is clean. All the deductions have been taken out. That is your money. You can go and spend it as you want. Now let's see. They want us to find the value of A, B, and C. Let's start with A. What is A? A, it is UIF contribution. And we all agree that UIF, it is calculated at what? At 1%. So UIF, we are going to say it is 1% of what? Of basic. So now let's write this 1% as a fraction. It's 1/100. The meaning of means we multiply. And what is our basic? It is 18,090. So our basic is 18,090. So when we calculate 1% of this, the answer is 180.90 cents. And remember, when it comes to the issue of the maximum ceiling, the examiner will tell you. If they are not saying anything about the maximum ceiling, then you are also not going to say anything. Just like this question. This question is very silent about the maximum ceiling. Therefore, we are going to pretend that it doesn't exist, and then we work with what we have. So this is the value of A. And then let's go to the value of B. What is B? B is our total deductions, meaning that to get the value of B, we must take this amount plus this plus this plus UIF. So let me write it down here to say B equals to 2,443.79 plus 772 plus 415 plus, remember A, 180. Guys, this is where now I want you to take out your calculators and assist me there on your side. It is 2,443.79 plus 772 plus 415 plus 180 and 90 cents. So the answer that we are getting there, we are getting 3,811 and 69 cents. So this is the value of B. This is your total deductions. It is 3,811 and 69 cents. Are we done? No, we still have the value of of C that we must calculate. Now, let me write C here. Please pardon the mess that you see there. What is our C? C is the net pay. What is your net pay again? It is your pay after all the deductions. I normally use this formula with the letters to say net is equals to your gross minus your deductions. So what is our gross? It is 18,090 minus what is the deductions? 3,811 and 69. Now we punch in on our calculators 18,090. The answer is 14,278 and 31 cents. So this is the money that Soli will be left with at the end of the month after all the deductions have been taken out. That the first part was the part of the UIF, which is the Unemployment Insurance Fund. Now we're moving on to the most exciting section. I know this one is everyone's favorite topic, which is the topic of income tax. What is income tax? It is a tax that is charged on your annual income. It is based on the tax tables that are issued by the South African Revenue Services. So very important, you must know that with tax, we always work with annual amounts. Always, we don't compromise. And then the tax tables are issued by what? By SARS. And what is SARS? It is the South African Revenue Services. Remember, they can also ask you in the exam, what is the organization that is responsible for the collection of taxes? You must confidently answer that it is the South African Revenue Services. Taxable income, it is the portion of your income that is going to be taxed. So a part of the income that you are getting should be subjected to tax. And that part, that portion of the income, we call it a taxable income. How do we decide which one must be the taxable income, which one must be taxed, and which one must not be taxed? We calculate taxable income by taking your gross and subtracting your non-taxable deductions. So by doing that, the balance, the answer that we get, that gives us the taxable income. So your non-taxable deductions are those deductions that will not be taxed. It means if you see those in your exam, already know before you even calculate your tax, you must first subtract those items. And what are those non-taxable deductions? It is your pension fund, it is your retirement annuity fund, your UIF, and your donations. Please take note, some books will say it's non-taxable deductions, others they will say non-taxable income. So whether it's non-taxable income or it's non-taxable deduction, it doesn't matter. At the end of the day, none of them is liable to tax. You must first subtract them. And then after you subtracted them, then you can calculate an individual's tax. Taxable income, so now it will be summarized in a formula like this to say that taxable income is equals to gross income minus your non-taxable deductions. This is an example of a tax rate table. So this tax rate table is used for the calculation of our taxes. Like I said when I started this section, that with income tax, all the amounts must be in the annual format. The same with this table. All the values in this table are in the annual format. If you look at the first column, it says taxable income. It means for you to come to this column, you must be having a taxable income. It's like you're going to use that taxable to knock. And for you to gain entry, you must have an annual taxable income. If you don't have, they will return you. So what you see here, it is the categories between 1 and 216,200, between 216 and 337. So all these intervals, we call them blocks. So that when I'm saying to go to block 1, I'm not blocks, I'm sorry, brackets. So when I say to go to bracket 1, you know exactly what I'm talking about. When I say go to bracket number 5, you know exactly what I'm referring to. So this one, the first one will be bracket 1. This one will be bracket 2. This one will be bracket 3, bracket 4, bracket 5, bracket 6, and the last one will be bracket number 7. So what we do now, when you have your annual taxable income, then you can go to your taxable income column and check under which tax bracket are you going to find your taxable income. If your taxable income is between the values of 1 and 216,200, then your taxable income will fall under bracket 1. If your taxable income was 500 rand, then it would fall under what bracket? Under bracket number 4, because this is where 500,000 will fall in. So once you've located the correct bracket, now you can choose the correct tax formula. They say it is the tax rate, or you can say it is the tax formula. So you use this formula to help you calculate the amount of tax that one is going to pay. Here is an example. It's still our same tax rate table. So look at number 1. Into which tax bracket does a person who earns 329,456 per year fall? So remember what I said, we want to check first is our amount in the annual format. Annual means per year. So you check it is per year. So we are happy with that. And then from there, you go to your tax rate table, your first column. It is your taxable income. What is your taxable income this time? 329,456. So let's check under which tax bracket. Is it bracket number 1? Nope. It is bracket number 2? Definitely, because 329 is less than 337. So the correct answer here would be bracket number 2. The second example, into which tax bracket does a person who earns 12,500 per month fall? Remember what I said? I said step number 1, you must check if your amount is it in the annual format or not. So our amount here is 12,500. We don't have a problem, but now it is per month. That is where the problem starts, because with income tax, all our values must be in the annual format. So what we must do, we must take this 12,500 per month and convert it to per annum. And how do we do that? We take the 12,500 and then we multiply by 12, because in a year we've got 12 months. And then this is where now your calculator comes in. You take out your calculator and then you say 12,500 multiplied by 12, and then you get the answer of 150,000. That is the answer that you will get. So that now, have you answered the question? No. What was the question? Into which tax bracket? Now that you've got the 150,000, you can go back to your taxable income and check 150,000 falls where? It falls under bracket number 1. So now to answer the question will be therefore it will fall under bracket number 1. Remember, you cannot just answer this question and say bracket 1 or bracket 2, because if you're just gonna answer it to say bracket 1 is correct, but you must still convert it to annual first before you can even begin to go to the tax rate tables. And then we have what we call a tax rebate. I normally like to say to learners that a tax rebate is a special discount that is given to all the tax payers. It's a special discount, or rather an additional discount. So it is subtracted after the income tax has been calculated. You don't subtract the rebates first and then you calculate tax. No, you calculate tax, and then after calculating tax, that is when you can subtract the rebates. Every person qualifies for primary rebate. Not really every person, but every tax payer. So everyone that is paying tax qualifies for a primary rebate. It doesn't matter how old they are. Older people are granted additional rebate. That is, if you are older than 65, you will receive primary and secondary rebate. If you are 75 years, you will receive primary, secondary, and tertiary rebate. And then very important with this table, it has 2 years. The other 1 year is for 2022, 1 year is for 2021. So you must be very careful when you are given a table like this. Always use the question as a guideline to tell you whether you must focus on 2021 or you must focus on 2022. So here are the 2 examples. Number 1, we still have the tax rebate table. What tax rebate will a 45-year-old person receive for the 2022 tax year? What tax rebate will a 78-year-old person receive after 2021 tax year? Guys, I've been talking too much alone, so I want to take this quick 3 minutes short break to give you guys a chance to answer these 2 questions. When I come back, we will discuss and then you can get to compare your solutions. We'll be right back. Welcome back. I hope you are re-energized and you are ready to share your solutions. Let's do this. So now we've got our rebate table, and remember I said with the rebate table like this, with this example whereby they give you the different years, you must be very careful. Always refer to your question. Your question will tell you which year you must refer to. So in such a case, you don't just answer, you check which year are they asking me about. So number 1, what tax rebate will a 45-year-old person receive for the 2022 tax year? It means in our table, our focus is going to be on the 2022 tax year. And the issue of age, girls and boys, with income tax, age is very, very important. And if the examiner asks you, why is the age of a person important when it comes to calculating income tax? The age is important for the purposes of rebates, so that we know how much rebate this person will qualify for. Otherwise, if you don't have the age, we don't know how much discount we must give. Another person will say they must get primary, another one will say no, they must get secondary, another one will say no, they must get all the rebates. So to guide us, to make sure that we are relevant, we must always know the age of the person. So this one is 45. As a 45-year-old, this person will fall under the primary rebate. And look, this is your primary rebate, because the primary rebate accommodates everyone. And then here, specifically people that are below the ages of 65, they will get the primary rebate. But this does not mean that it's limited to people that are below the age of 65. Even if you are above 65, even if you are 90 years old, you will still get the primary rebate. Remember what I said? I said with primary rebate, everyone that is a taxpayer qualifies for a primary rebate. So our taxpayer here is 45 years old. For 2022, what rebate are they going to get? They're going to get a 15,714. This is the rebate that they are going to get. And then number 2, what tax rebate will a 78-year-old person receive for the 2021 tax year? Again, the year they are telling us. It means we are no longer going to our second column, but now we must focus on the first column. And how old is that taxpayer? 78 years old. So you go to your rebate. 78. Is it between the ages of 65 and 74? Nope. Is it between the ages of 75 and older? Yes. But now here's the tricky part. This does not mean that this taxpayer will only get a tertiary rebate. Because they're at tertiary, they will get primary, they will get secondary, they will also get tertiary. Take this to your life in practice. You don't just wake up one day and say, I'm going to tertiary. No. In the schooling system, you start first in primary. You go to primary school, and then you go to secondary school, and then you go to tertiary school. You don't just wake up and say, I'm going to secondary. Everything must start at primary. That's why you are saying everyone gets primary. Even in life, everyone must go to primary school. So the rebate that this person is at tertiary rebate. So for 2021, the rebates that this person will receive, it is 14,958 plus 8,199 plus 2,736. You don't leave it like this. This is where you take out your calculator and you punch in all these values. And guys, do not take chances and want to add this manually. In MathSlit, we are allowed to use our calculators all the time. So it's 14,958 plus 8,199 plus 2,736. And the answer that I'm getting there, I am getting 25,893. So this is the total rebate that this person is going to receive. And then we've got what we call a tax threshold. A tax threshold creates a lot of confusion. And honestly, there is nothing to be confused about. With the tax threshold, it determines whether an individual is liable to pay tax or not. It's like it is a guideline. It tells us that if you are this age and you are earning this amount or less, then you are not supposed to be paying tax. If you are this age and you are earning more than this amount, then you need to start paying tax. That is what the tax threshold is all about. It means here, let's look at 2022. This is 2022. And for someone that is under 65 years old, what does this 87,300 mean? It means for someone that is under the age of 65, that earns 87,300 or less, then this person must not pay tax. Or if you are under the age of 65 and you are earning more than 87,300 per annum, remember all the values are per annum, then you should start paying tax. That is what the threshold is all about. It is a system that determines whether one is liable to be paying tax or not. Then that's it. If the taxable income is higher than the tax threshold, an employee must pay tax on it. This is basically what I just explained now. I feel like if I'm going to read here, I'm going to confuse you even further. So lastly, if you are 75 years and older in 2022 and you are earning 151,100 or less, then you don't qualify to pay tax. But if you are 75 years and older and you are earning more than 151,100, then you should definitely start paying tax. That is what the tax threshold is all about. Here is a practical example on how questions can be asked with regards to the tax threshold. Again, here it is actually supposed to be the okay, this is the tax year, it's fine. The tax year 2022 and 2021. Again, the year will guide you on how you are supposed to, the question will guide you on which year you must focus on. So if you are under 65, these are the tax threshold for the 2 years. If you are between 75 and older, these are the threshold for those 2 years. Again, remember, these amounts are your annual amounts. With tax, we deal with annual amounts. So an example, how old do you have to be to qualify for the 128,650 tax threshold for the 2021 tax year? So we go to 2021. The question is saying 2021. We go to 2021. There is 2021. And then they say, what is the threshold? It is 128,650. There is 128,650. So how old do you have to be here? You just draw an arrow like this. You have to be between the ages of 65 and 74. That's how old you must be for you to qualify for the 128,650 tax threshold. The medical tax credits. It is a tax credit which is deducted from the tax amount due. The way that I like to explain this one, that a medical tax credit, it is like a rebate. Remember what is a rebate? It is a discount. But now with medical aid, a rebate is a discount that's given to all the taxpayers. Medical aid, it is also a special discount, more like a rebate, but it is only given to the taxpayers that are members of the medical aid. So for you to qualify for medical credit or medical rebate or medical discount, you must be a taxpayer that is also paying for medical aid. Those are the conditions why you will get a tax credit on your medical. So here they're saying it is an additional rebate, like I said, for taxpayers that are also members of the medical aid. And remember, if you are a member of the medical aid, if you are paying for medical aid, you must also be under that cover of your medical aid. I cannot just go and get a medical aid and I'm not a member of the medical aid. I just put in my family members. It doesn't work like that. And remember, I said with income tax, all the values, all the amounts in the tables are in the annual format. Well, except this one. With the medical aid, the table for medical aid, it is in the monthly format. So the table in the medical aid, and it is written here that these are the monthly tax credits. So if you see this amount here, it is per month. If you see this one, it is per month. If you see this one, it is per month. If you see this one, it is per month. And the principle doesn't change. We work with annual amounts. So whatever calculations that you are doing, at the end you must always multiply by 12 because we want the amounts to be in the annual format. So here they say that main member, it is 310. What does it mean? It means if you calculate the discount, or rather the rebate for this person, if I am a taxpayer and I have the medical aid, then I'm the main member in this medical aid. So if you wanted to calculate my discount, you will say 310 rand multiplied by 12. You find that I have a spouse, and my spouse is also a member on my medical aid. So if you calculate my discount, my credit, my medical aid credit, you are going to include my 310 times 12 plus my spouse that is on the medical aid. My spouse is going to be my first dependent. They will also get a discount of 310 multiplied by 12. You find that I have a spouse and I have 2 children. If you want to calculate my medical aid now for the year, I said I have a spouse and 2 children, so meaning we are calculating a discount for 4 people. How are we going to do that? We are going to say the first person will get how much? 310 plus the second person will get how much? 310 plus the third person will get how much? 209 plus the last person will also get how much? 209. And then from there, you take out your calculator. Don't ever take chances and think you can add all this in your head. You won't, trust me, you won't. So let's do it. It's 310 plus 310 plus 209 plus 209. And the answer that we are getting, it is 1,038. But remember, this amount, it is monthly. So if it is monthly, we must always convert it to per annum. So I will say times 12 multiplied by 12, and then the answer is 12,456. So this is the answer that you will get for as a medical aid tax credit. This means that if you are calculating this individual's tax, at the end, when you subtract your rebate, you are also going to subtract an additional 12,456 for the medical tax credits. Here is an exercise now. Lydia, who is a 32-year-old, works as an admin assistant for Raceville Primary School. She earns a monthly taxable income of 17,500 for the 2022 tax year. Use the 2021-2022 tax rate tables and the information alongside above to answer the following questions. So now, guys, remember here, she earns a taxable income. With taxable income, it means this is the income that we are going to tax. When they tell us that it is taxable, immediately we are going to calculate tax for that income. But now the problem is that this amount is monthly, and we have a problem because we know that in tax everything must be what? It must be yearly, or it must be annual. So this problem, I don't know what we are going to do about it, but let's see. Number 1, calculate Lydia's annual taxable income for the 2022 tax year. Remember, what did they give us? They gave us the monthly taxable income, the taxable income of this per year. So this one, it is the monthly one. So to convert from monthly to per annum, we say 17,500 multiplied by 12. Then you take out your calculator. We say 17,500 multiplied by 12, and the answer that we are getting, it is 210,000 rand. It means the annual taxable income for Lydia, it is 210,000. So if we were to calculate tax for Lydia, we will use this amount to go and calculate her tax, because they told us that this is the taxable income. And remember our table, this is the taxable income. It means once you've got taxable income, then you can come to this bracket and do the substitution and calculate your tax. Number 2, what tax rebate amount will Lydia receive? That is where now the issue of age comes in. Remember, how old is Lydia? She is 32 years old. So the tax rebate that Lydia will get, it will definitely be the primary rebate. So we are going to write it that she will get the primary rebate. And how much is the primary rebate again? Which is equals to how much? It is 15,714. So this is the primary rebate. This is the rebate that Lydia will get because Lydia is 32 years old. She only qualifies for one rebate. The annual taxable income that we calculated in number 1 was 210,000. So number 3, we are going to identify the taxable income bracket in which Lydia's taxable income falls. Remember, this is the taxable income. And then I said the brackets, this is bracket 1, this is bracket 2, bracket 3, bracket 4, bracket 5, bracket 6, up to bracket number 7. So we want to know where does this 210,000 fall. Let's check. The first one, between 1 and 216. Between 216 and 210, which one is bigger? 216. So it means this 210, it definitely falls within the first bracket. So our answer then would be, what would be? Bracket number 1. That is the answer for number 3. The answer is bracket 1. Number 4, calculate the annual tax that Lydia will pay for the 2022 financial year. Remember, we already have a taxable income. We've already established the tax rebates that she will receive, and we've already decided that she will fall under bracket number 1. Now, what is the formula on bracket number 1? It is 18% of the taxable income. So we'll rewrite the formula to say that it is 18% of the taxable income. And then how do we write 18%? I like to say it is 18 over 100. And in mathematics, mathematical literacy, we know that of means what it means? Multiplication. And what is our taxable income? It is 210,000. So we'll say 210,000. And then you work out the magic on your calculator. Multiply by 0.18, which is 18. And I'm getting 37,800. Remember, this is the tax that she must pay. Every time when we calculate tax, we must always subtract the discount. The discount is what it is, your rebate. So you'll say minus the rebate. Then we say 37,800 minus, how much is our rebate? We've already determined that it was 15,714. So our amount there, tax amount minus 15,714. The answer that I'm getting, I am getting 22,086. So this is the amount of tax that Lydia is going to pay annually. Annually means per year. If they had said monthly, we were going to take this amount, the 22,086, and then we're going to say divide by 12 to get to know how much she will pay per month. But for now, because they said annually, we are going to end there. And because they didn't say anything about Lydia and medical aid, we don't say or do anything about the medical aid as well. Number 5, use calculations to show how the amount of 163,335 in bracket 5 was determined. So remember the brackets. I said this is bracket 1, this is bracket number 2, this is bracket number 3, this is bracket number 4, and this is bracket number 5. So this 163,335 that they are referring to, it is this one, 163,335. So they want us to show how this amount was determined. So what I do here, it's actually a reverse method. You need to go back to the bracket before this one, and you will rewrite the formula, this formula. You're going to rewrite this formula to say, okay, this is 110,739 plus 36% of the taxable income. You are going to look at the column of taxable income. This is the taxable income, and you are going to take the maximum amount. The maximum amount here is how much? It's 613,600. So you'll say 613,600. When you see the word above, the above means what it means. You subtract. So minus how much? Minus 467,500. Then you close the bracket, and then from here, let's simplify. It is 110,739 plus 36%. I like to say 36 over 100 of, I say multiply. Let's get the answer from the bracket. It is 613,600 minus 467,500, and the answer is 146,100. And then from here on, you should do it step by step. You don't add, we multiply first. Remember BODMAS. It's a pity I don't have enough space, so I will do the whole sum as it is on the calculator. 110,739, and then the answer that I'm getting there is 110,000. No, I think I made a mistake. Can I just quickly redo this? It's 110,739 plus 36% of 146,100. The answer that I'm getting is 163,335. But remember, this is the, oh, you wanted to know how this amount was determined. We are not calculating any tax. So looking at the table at bracket number 5, that is the 163,335, and there is the 163,335. Remember, this is the same value. They wanted us to show how it was determined, and that is exactly what we did. So if maybe they wanted you to determine this one in bracket number 3, the 70,352, how it was determined. So the first step, you go back to the table on top of that, this one, and then you rewrite the formula as it is, but on your taxable income. For your taxable income, you go to this table, because this table, it is the table of taxable income, and then you take your maximum amount. Your maximum amount becomes your taxable income, and the word above, it means what? It means subtract. Subtracting what? 216,200, and then you will see, when you do your math, it will take you back to this answer, to 70,532. So this is how you answer that question, where you have to show how a value was calculated. Number 2, Tato, who is 44 years old, has an annual taxable income. When you see the word taxable income, then you know that you must go straight to this amount. You must come to this table. When you see the word taxable income, you see even here it says taxable income. It means you are good to go. They say you are Jojo. So there's a taxable income of 364,321, and the beauty of this is that this amount is an annual amount, so we are happy with that one. He contributes towards a medical aid for himself and his wife. Determine Tato's annual tax amount payable. So it means now he's paying medical aid for how many people? Himself and his wife is actually paying medical aid for 2 people. So you must remember this when you are going to calculate the medical tax credits. Must remember that this person is contributing only for 2 people. So here is the question. Determine Thato's annual tax amount payable. So now we must calculate the amount of tax that Thato is going to pay. Remember, we already have the taxable income. So 364, we must check it falls under which tax bracket. 364, it falls under, this is bracket 1, this is bracket 2, this is bracket number 3. So 364 will fall under bracket number 3. So what we do, we rewrite the formula. We'll say 70,532 plus 31% of, open the bracket. What is our taxable income? Do you have the taxable income? Yes, it is 364,000. 364,321. And I said the word above means what? It means subtract. We are always going to subtract. Minus this amount, which is 337,800. And then we go to our calculator. Okay, let me rewrite this one. It is 70,532 plus, remember, I like to write this as 31 over 100 of, the meaning of is what? Is multiplication. Then we open the bracket. Then we say 364,321 minus 337,800. The answer that I'm getting inside the bracket is 26,521. So I'm just going to punch this in the calculator to get the answer. Plus 70,532. I'm getting the answer of, guys, I hope you are also punching your calculators there so we can compare. You don't say I'm lying to you. It is 78,753 and 51 cents. Remember, this person is paying medical aid. He's paying medical aid for himself and his partner. Let's see if we have a table for medical aid on the next column. So we do have a medical aid table. Then according to the medical aid table, remember we already calculated the tax in the previous slide, and then our tax amount was 78,753 and 51. Let me show you. This one, we calculated it. This one, this is the tax that is payable. But remember, when you calculate tax, you must always give the discount. The number 1, it is the rebates. So we haven't subtracted any rebates. And then secondly, since he's a member of a medical aid, it means we must also calculate his medical aid credits, how much discount he must get for being a member of a medical aid. And then once we've got those two, then we can subtract them from the original tax amount that is payable. So now this is the tax that he must pay. But now let's look at the medical aid. For medical aid, we said he's paying for how many people? For himself and his wife, which is how many people? It is 2 people. So the first person who is the main member, it is himself, it is 310, plus the second person, it is the first dependent, it is how much? It is 310. And then guys, the first dependent on the medical aid does not always mean that it is a partner, a wife or a husband. I can be on medical aid with my 2 children. That child, the first one that was registered with the medical aid, will be my first dependent. So when you calculate my medical aid, it will be myself, main member, first dependent, my first child, second dependent, my second child. Do you understand? So the first dependent does not always mean that it is a partner. No, it doesn't work like that. So it is 310 plus 310, it is 620. But remember, this is monthly. And we say in income tax, we always work with annual amounts. So you take your calculator, always use your calculator. No matter how good you are with mental maths, always use your calculator. So it is 620 multiplied by 12. Let me show here. Multiplied by 12. The answer is 7,440. This is for medical aid. And then for rebate, how old is our taxpayer? She is 44 years old. So as a 44-year-old, she falls under the primary rebate. And how much rebate will she get? She will get 14,958. So this is the rebate that she will get. Now, when we calculate the total tax now, the total tax is gonna be this amount, the 78,000 that we calculated, 78,753 and 51, minus rebate, minus medical aid. Oh, my space. And then it is equals to 78,753 and 51 minus the rebate is how much? It is 14,958 minus the medical aid is how much? It is 7,440. Then you take out your calculator again. You say 78,753, 78,753 and 51 minus 14,958 minus 7,440. And then the answer is 56,355 and 51 cents. Did we answer the question? The question says determine TATU's annual tax amount payable. So yes, we have answered the question. If they wanted monthly, we are going to take this answer and divide it by 12 for us to get the monthly tax that is payable. I hope you are still following. I know it can be a lot to take in at once, but I am honestly enjoying this section, and I hope you guys are also enjoying as much as I do. My favorite section in mathematical literacy, it is the section of finance, for obvious reasons that in finance we're talking money. We are talking about money, and we are talking big figures. So yeah, how can that not be exciting? So yes, let's look at another example again. Example number 3. Mr. Zulu is a 68-year-old businessman, married with 3 grandchildren who are also covered by his medical aid. As a company director, Zulu earns a monthly income of 42,000 and donates 2,500 every month to a local orphanage. The tables alongside show the individual tax income rates for the 2021 and the 2022. So number 1, the first information that you highlight if you're in the exam, it is the age that this person is 68 years old, meaning in terms of the rebates, he qualifies for both primary and secondary rebate. And then he is married. It means there is a spouse. And then there is 3 grandchildren. Remember, he is also a person, meaning for medical aid, how many people are there? It is 1 plus 1 plus 3. So for medical aid, we'll be calculating medical tax credits for 5 people. As a company director, he earns a monthly income of 42,000. Another problem is this with the monthly income, because when it comes to taxation, we do not want to see the word monthly. Everything that we are working with, it must be in the annual format, meaning that when you see this 42,000, you know that you must multiply it by 12 for you to get your annual amount. And then every month he donates 2,500 to a local orphanage. Remember what we know about donations. The purpose of the donations, it is to lower one's taxable amount, the amount of tax that one has to contribute. Meaning, if we see donations, we are not going to charge this person tax on the donations. So before we can actually calculate his tax, we must first subtract the donation. We first take out the donation, and then the money that is left, we will then tax the person on that amount. Now, determine his annual taxable income. Remember, for annual taxable income, it is the amount that we are going to tax. So the amount that we are going to tax here, we are not going to tax the donation. Remember, when you see donations, when you see UIF, when you see pension fund, when you see retirement annuity fund, we do not tax those. We don't touch them at all. So here we see donations. Before I can determine the money that I'm going to tax, it means I must first subtract those donations. So to say annual taxable income, we then say 42,000, and then we subtract what? We subtract the 2,500, and then our answer would be, we say 42,000, and then we subtract 2,500. Then the answer that we're getting is 39,500. So if we tax him, this is the money that we are going to tax him on. But we've got a problem here. Our problem is that this amount is per month, and we know that when it comes to tax, everything must be in the annual format, because they say they want the annual taxable income. So it's 39,500. To convert from monthly to tax, we multiply by 12. To convert from monthly to annual means per year. So we say 39,500, and then we multiply that by 12. I hope you are also doing your calculations then. I'm getting 474,000. So this 474,000, it is our annual taxable income. That is our annual taxable income, meaning if we are going to calculate Zulu's tax, this is the money that we are going to be using. Hence, calculate his annual tax payable. Remember, his taxable income was how much? Taxable income. It was how much? It was 474,000. So this was per annum. We go to the taxable income table, and then we check, where does the 474,000 fall? Does it fall in bracket number 1? No. Does it fall in bracket number 2? No. Does it fall in bracket number 3? Yes. No. No. Does it fall in bracket number 4? Absolutely. It is between 337 and 467. So it means for us here, we must work with bracket number 4. So this is bracket number 4. We rewrite the formula. We'll always rewrite the formula there. It is 110,739 plus 36% of our taxable income. What is our taxable income again? It is 474,000. So it is 474,000. Remember the word above. I said above means what? It means we subtract. Minus how much? 467,500, and then we close. Girls and boys, I've been talking for too long. I'm getting dry, so I'm gonna take a quick water break. While I do that, I want you guys to continue with the calculations to calculate the amount of tax, but then you stop there because we don't have the table for the rebates. I'm just gonna take 1 minute, exactly 1 minute. I will be back, and then you can compare your solutions with mine. Welcome back, girls and boys. I hope you got the answer. Now let's compare our solutions. So what we are going to do, we are going to bring down the 110,739 plus, remember the 36%, I always say 36 over 100. The meaning of in mathematical literacy is multiply. Then let's simplify what is inside the bracket. It is 474,000 minus 467,500. And then I've got 6,500. I hope you are getting the same answer. I got 6,500. And then now we apply our BODMAS. BODMAS says we must multiply first before you can add. Plus 110,739. And then I'm getting 113,079. Remember, this is the tax that Zulu would be paying. But remember, he still must get the rebate. He must also get the medical tax credits. So let's see on the next in the next tables how we calculate all those. So how old was Zulu again? Let's quickly check. They said that he was 68 years old. So if he is 68 years old, let's see he qualifies for which rebate. For 68, it means he is here. He is here. So for him to get to secondary, remember, you don't wake up and go to secondary school. You start with primary school, then you go to secondary school. So it means for him to get the rebate, his rebates, it is how much? It is 14,000. Oh, sorry about this. 14,958 plus 8,199. So we do the math. You add the two. We say 14,958 plus 8,199. I'm getting the answer of 23,157. So this is the rebate that he is going to get. But remember, he's also paying for medical aid. And remember, for medical aid, it was him, it was spouse, a wife, and it was 3 grandchildren. So I'll just say 3 GC. So all in all, he was paying medical aid for 5 people. Now let's calculate his medical aid discount. So for the main member, for himself, it is 310, plus for his wife, 310, plus for the second dependent, it is the first child on the medical aid. So this is child number 1, it is 209. This is child number 2, it is 209. Plus, remember, there's a third child because there's 3 children. Now our table ends at 209, at child number 2. What do? It means everyone else that is coming, all of them are going to get this 209. Any additional person that is coming after here, they are all going to get the 209. Therefore, we are going to say this plus the 209. Then let's do our math. Let's add all the values. We will say 310 plus 310 plus 209 plus 209 plus 209. And then the answer that we are getting there, we are getting 1,247. But remember this amount, this is monthly. This is just monthly. But what do we want? We want the annual, because when we work with taxation, we only work with annual amounts. So we are going to take this amount and multiply it by 12, and then to get 14,964. So this is the annual medical aid credit. This is the annual medical aid credit. Remember, it serves as a rebate. So to calculate the total tax that you will pay, we are gonna say the tax amount minus the rebate minus the medical aid. And then remember the tax amount was already calculated in the previous slide, and it was 113,079 minus, this is the rebate, it is 23,157 minus the medical aid. How much medical aid? 14,964. 14,964. And then we punch in our calculators, guys. We say 113,079 minus 23,157. To see how I'm relying on my calculator, you must do the same. 23,157 minus 14,964. Let's see. I'm getting 74,958. So this is the total amount of tax that Zulu is going to pay for the 2021-2022 tax year. Once we've subtracted the rebate, once we've subtracted the medical aid. So this was quite a very lengthy one, a bit complicated, but you don't panic. Let's quickly revise this section. We know that if they said here that Zulu is 68 years old, he is a businessman that is married with 3 grandchildren who are also covered by his medical aid. And as a company director, Zulu earns a monthly income of 42,000 and donates 2,500 every month to a local orphanage. The moment you see donates or donations, you know that if someone is contributing towards donations, then we cannot tax that person. The donations are your non-taxable deductions, or we can say they are your non-taxable income. That is the part of your deduction that we are not going to tax. And why is that the case? The reason why we don't tax donation is because, again, it will depend. That donation, it must be to a registered organization. Let's say in this case he chose a local orphanage. Remember, it is the responsibility of the government to take care of the orphanages, to make sure that those children that live there, they've got shelter over their head, they've got clothing, they've got food, they are well taken care of. So if someone like Zulu comes and say, from my salary, from my income, I'm willing to assist these poor orphanages and then assist with the little amount that I have. As much as the money is little, but what you are doing, you are also relieving the government. Maybe your money is buying blankets. So it means now for the instead of the government to buy those blankets, then they can channel their money somewhere else. So in a way, you are assisting the government. You are relieving the government. So as the government's way to say thank you to you, the only way they can thank you is to relieve you of your tax amount that you must pay. So they say that since Wena Zulu, you are assisting us, we are also going to assist you. It means now when you calculate your tax, we will not tax you on the money that you are donating. So the examiner can ask you guys, what is the purpose of donations for taxpayers? Most of the taxpayers, they'd rather pay for donations. They'd rather donate their income. And the purpose, it is to minimize the amount of tax that they have to pay. That is the main reason why most people opt for donations, to minimize the amount of tax that they have to pay at the end of the day. And then the issue of your pension fund, I'm going to make example with government employees. They are contributing every month towards pension fund. And then the amount that a person contributes towards pension fund, it is not taxed. Meaning that before the income tax for that particular person can be calculated, they must first subtract the pension fund. If let's say I'm earning 20,000, if I was earning 20,000 rand and then I'm contributing 3,000 towards pension fund, when you calculate my tax, you will not calculate my tax based on the 20,000. What you are going to do, you are going to say the 20,000 minus the 3,000. So when you tax me, you are only going to tax me on the 17,000. The 3,000 must be excused. What is the reason for that? The government employees, we are allowed to work until you reach the age of 65. Meaning after 65 years old, you must leave the system. You must retire. And when you retire, that is when now you'll be given all your money for all the years that you have worked. And when that package come, that money in a lump sum come, we normally say this is my pension fund money. So when that pension fund money comes out, when it comes to you, it is then going to be taxed as a lump sum that you are receiving. The government is going to apply tax on that amount. So the reason why it is not taxed today while I'm still young, while I'm still working, is because the government knows that when we are coming, we are saving you for later. So later, when it's a bigger amount, it's a lump sum, that is when now they are going to tax it. So that is the reason why we are saying that if a person is contributing towards a pension fund or a retirement annuity fund, we do not tax them now, because later when they retire, later when they resign, they stop working, that money is going to be taxed. So if we tax it now and it's going to be taxed again later, it is not fair. It means we are taxing a person double. So that is the reason why we will not tax someone. If we see that they are contributing to pension fund, we must subtract it. If they're saying this person is contributing towards donations, you must subtract it. And then with the issue of UIF, we also will not tax UIF. If a person is contributing towards UIF, that money, before we calculate that individual's tax, we must subtract the UIF. But remember now, with the UIF, it's a very small amount. If maybe, let's say you are working at KFC and then you are earning 10,000, and then from this 10,000, you contribute 1%. 1% is how much? 1% would be 100 rand. That is the money that you are contributing every month. When you claim for UIF, you get it in smaller portions, but then you only get it for a period of about 6 months. And within that 6 months, if you are earning 10,000, you are not going to be getting that 10,000 every month for UIF. It is a small portion, about 55%. So it means from this 10,000, you can only get 5,000 the first month. And then the next month, it can go to 3,000. And then the next month to 2,000. And as the months are going, the money is also reducing. So that money that we are getting for UIF, it is already too little to take care of your needs. So that is why, again, the money for UIF will not be taxed, because when it comes to you, it is already too little, and it comes obviously as an emergency to assist, because now you are no longer unable to work, whether due to illness or maybe you are on maternity leave, or if it was locked down, you cannot work, it is an emergency. So the little that you are getting is just to assist you for that time being until you are able to be back on your feet and be able to provide for your family. So to close off today's lesson, we have learned that when we talk about tax, a tax, it is a compulsory levy that is subjected to all the South African citizens that are earning an income. So everyone that earns an income is liable to pay tax. And what is the organization that is responsible for the collection of taxes? It is SARS. What does the acronym SARS stand for? It is your South African Revenue Services. The examiner can also ask you, what happens to the money that we contribute towards tax? That money is used by the government to run the country, to pay for things like road and infrastructure. The beautiful roads that we drive in, they are maintained by the money from the taxpayers. To build schools, there's a lot of new beautiful schools in Gauteng, schools of specializations. Those schools are built from the tax money. To build hospitals, to build clinics, to pay the public servants. Who are the public servants? Your police, your nurses, your teachers. That money that is used to pay the public servants, it is the money that is coming from tax. So there is basically the money that is collected from tax, it is the money that is used to run the country. That money runs the country. And then girls and boys, this is a section of income tax. And I know this is not a very easy section for everyone. Some of you will get it, others will not get it. Some of you will just get the basics, but don't be too hard on yourself. With a bit of practice, if you can get the different types of questions, you work on them. There's going to be Saturday SIP classes. Make sure you attend those classes so that you can get different explanations from different teachers. I'm telling you, with a little bit more of practice, you will get this section and you will master this section, because this is always in the exam and it does carry a lot of marks. So make sure that you practice this, you expose yourself, so that when you come across the section of income tax in the exam, you are not wondering and even more confused. So with all that being said, we have come to the end of the session. Thank you so much for watching this lesson. See you again next time. Bye bye.